trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at the Treasury bond market. This is a lesson on how to lose $250 in about 10 minutes. I was selling the 382 right here at 13.27, and it got stopped out right there. Now, if you reversed, you'd have made all your money back plus some, but I didn't do any reversing. But you can see when these 382s fail, you get out of Dodge just like any other pattern that fails. Sometimes they work, sometimes they don't. Okay, let's get up here and take a look at a couple other things that we're paying attention to here this morning. Those of you that like Fibonacci numbers, I would like to show you how these guys on Wall Street operate, because you think these numbers are not accurate. Think again. There's the high that we made back here on the 28th. Today's high, 61% retracement at 64.63. We're now 22 handles below that. That's the S&P. If we take the NASDAQ, come over and look at this. This is why I use split screens, folks, so I can see when these numbers are hit if the market's going to turn. Look how the NASDAQ turned exactly at the 50% retracement, exactly when the same time that the NASDAQ or that the S&P was hitting the 618. Okay, and of course, the last one, well, the Russell has been weaker anyway, but Russell made a beautiful ABCD pattern here this morning, up about 20 points. You can see it right there, and it's been heading down ever since. And the Dow Jones is the weakest of all. And of course, you can see here, this is didn't even do very much. Let me just get this up here in the hourly so you'll be able to see it, because its retracement was only at the 382 again today. You can see we hit it the last several days, and now it's still drifting lower. So that tells us there's still a bearish bias to the market that we're looking at right here. Okay, now let's move on to one other one that I think is going to be exciting to watch, and that is the crude oil, because we did have some things happening. Let me do this, folks. Give me 1 second here so I can pull them up one at a time. And here's where we go. Okay, here's where all right, there's where we are right here. Okay. I'll have to tell you that gold story because that still haunts me to this day. Here is the crude oil. We had an ABCD down here this morning, and it was a buy right there. It had a nice move, well over $600. Then it came down and made a new low. It didn't stop you out because you're risking 40 pips. Then it bounced up, and then it went to the 382. And when that happened, there's your high, there's your low, there's your 382, hit it, bang. And, this is where I said, wow, I can't stay in this any longer. I got out of it, but I didn't go short. So that's what I'm trying to do when I'm doing these things, is to try to pick out the ones that are the easiest ones to trade without risking very much at all. Because as the old Chinese curse says, may you live in interesting times. Well, indeed, we do live in interesting times. Folks, let me tell the gold story, because that was one of my favorite things that I did in my whole life. Hold on 1 second. This was during the years of Drexel from 76 through 82. That's basically all I did. Well, I did a lot of gold and silver buying and selling, because I had so many people were, in the business there, and I had the coin business locked up. So they were, hedging and stuff, but most of their hedges were Texas hedge, long the gold, long the futures. Anyway, when we got to the high on January the 8th of 1980, I sold all the positions for two reasons. One, if we sold it, then the taxes weren't due for another 18 months. So that was the main reason I did it. And I did it at that. I told everybody I was going to do that. Gold was 770, okay? And I had two of my very best customers, people that I traveled with their families. They said, we want to stay long. And I said, okay, you can. But I said, it's really dangerous up in here. And I kept asking them, even when I got to 800, 820, 830, I said, you got to be careful. Oh, no. Well, it topped on the 20th of January that year, and the market was limit bid. December gold, remember, spot's trading at 865. December gold was trading over 1,000 because interest rates were, 12%. And so what happened was everything is locked limit up, and I called the floor and I asked Richie Goldberg, I said, what's going on out there? And he said, well, he says there's not much trading. He said, they're trading limit up in here. He said, well, not too much. How about in the back end? He said, there's nobody in the pits. I said, and I had made a lot of money. So I told Richie, I said, Richie, I want you to sell me a December gold. I think it was 1,020. It was limit bid up $50. And he said, Larry, don't throw your money away. Come on. I said, Richie, I make a pretty good living. I'm a big boy. I can take Larry, Richie, I said, how long you been down there on the floor? He said, 2 years. And I said, well, Richie, sell me 2. He said, you smart ass. And he said, I'm going to sell you 2 and make God bless your soul. He said, you're probably going to lose everything you have. I said, well, that's not going to be easy, but I could probably do that. So I put the 2 on, and he comes back with the fill. And I said, okay, Richie. I said, buy 2 of them, limit down. And with a little bit of silence, he said, I don't believe that. And I said, well, you got to put the order in, Rich, because I'm giving you an order. Folks, believe it or not, a half hour later, gold had dropped. And I got filled limit down. I made a little over $26,000 in about 20 minutes. That afternoon, I went out and bought a new car. But anyway, that's the old days when things were fat and easy. Now, all I've done here, you can see on this gold here, 3609 was one of the tops that we were looking at. We're 3634. Somewhere in here, we will have a top. Now, all I have to do is keep extending this, because right now it's extended by, the AB leg is extended by 1.27 of the CD. CD is 1.27 of this. I believe that's what I did that on. Let's double check it just to see. Yep, there it is, the 127 right there. So it's going to go higher than that. And how high, I don't know. What I'm going to do is I'm going to wait, because when it does top, it's going to do something like this. It's going to have these big wide ranges. You watch for your 382s, and that'll help you. But that's not in the cards right now, so I'm just walking through that one step at a time. That's really what I'm paying attention to. Okay, now the next one I wanted to talk about here. Hold on one second. I've got that out of the way. Where is it? Shut the front door and raise the rent. I did the crude oil. Okay, we've already covered the S&P. Russell, I don't have it up here. Let me get the wheat up. That's the one. This is the one that frustrates the heck out of me, folks, because evidently people are going to stop eating pasta, cookies, and bread. But let's get the wheat up here, this December wheat. And I bought this at 25 and for 525, and we're at 523 right now. Here's where we are. I'm still in it, still in this trade. My stop is at 518. I bought this at 525. That's been 10 days ago, folks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days we've been here, and I've only got $100 loss. Now that might not sound bad, but it sounds good because I haven't lost any very much money at all. My stop is right below here. So we'll be right back. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this was another one that I liked really well last week. Remember the soybean meal? This was set up perfectly. Looked like it was working for 2 days. We stopped out with a $300 loss. Now we're down below the 61% retracement already, so you have to stand aside. I've been in the wheat longer than I was in the meal, so that's the reason why I have to do equal positions, because if I'm going to risk $300 in wheat, I have to risk $300 in the meal also. But that was my game plan, and it didn't work, so I move on, and that's it. Okay, I'm going to talk to you just a little bit about the basic stock market. As you know, I've sent out this report that I think have reached some type of a major top here in the market, and I'm very, very bearish. I'm as bearish as I was bullish back in 2009. It's the same pattern. We have a Bradley day. By the way, this was the anniversary, folks, of the stock market high on September 3rd, 1929. That was part of a 92-year cycle that started in 1837 when Andrew Jackson was president. The first thing he did was abolish the central bank known as the Federal Reserve. Didn't come back until the creature of Jekyll Island in 30, God, I can't remember the date it was. I think it was 33. Well, whatever it was, the creature of Jekyll Island was back in the 30s somewhere. That's when they brought the Fed back. But the reason why I'm bearish this, because it has so many similarities to what happened. The cycle from 1837 to 1929 was 92 years. We bottomed in 1932. Okay, on July the 8th. And from there we went up 92 years until 1925. That's a 92-year cycle. Maybe that means something, maybe it doesn't. But Peter Leides talked about that. All I did was I'm just looking at the Bradley model. It's turned down, and it should be down now for a while. And if I'm right, we're going to go a lot lower. There might be an outlier event to get it triggered, because there's just so much complacency in the market that it's really, well, it's amazing. But don't forget, this market's been up for 15 years, folks. Right, we started in 07 was the low, 09 was the low, and here we are. It's up 16 years to the 25th. Okay, so to 2025. Anyway, that's what we're watching here this morning. I want to. There's so many things that I try to say, but in the reports and stuff, but there's so many of them. I outlined it in that report that I read. You know, the Venus sextiles are all lined up. Everything is perfect. Now, that doesn't mean it's going to work. And, you know, Tony Robbins said, the greatest source of all your frustrations in life are unfulfilled expectations, whether it's your family, the market, your health, or whatever it is. That's where your frustrations come from. And folks, I still have nice profits on some of these things, but by golly, they could melt away, and I'll end up, sitting here to break even trade. But right now, it's doing what it's supposed to be doing, and we're going to find out if it's going to work here in the next few days. Within the next 2 or 3 days, there should be some type of an outlier event that pushes the market below the lows that we made just a few weeks ago, and that will be the first sign that the trend is changing. And so that'll be really interesting. Another factor that I think is important is that on last Friday, there were more ETFs than there were stocks listed on the New York Stock Exchange. And you remember what Warren Buffett said about ETFs. They were weapons of mass destruction, whatever that means, I don't know, but that's what we're watching here. So those are some of the trades that I'm looking at right now. So we'll come over here. And the main one I wanted to cover is I want to show soybeans, because I have another one here that I had to do because it's everything that I believe in. This is November soybeans. I'll get it up here, and it's there, right there now. You can see it. We're right on the money right now. And I bought the beans right here at 32. They're trading at 33. That's an ABCD at a 382, folks. If I can't do that trade, I got to turn in my pencil and move on. I'm only risking 6 cents. My stop is down here, but that's exactly what. There's your A, B, C, D. There's your 382, and that's what I wait for. Sometimes they work, sometimes they don't. The fact that it's held this level so far today with the low of 1003, 1030 and a half, so it's right in that area where I have to be a buyer, because I think this is bullish, because there's an ABCD and a 382. It has an ABCD, so I have to do that. And I understand you take a loss in take a loss in Treasury bonds. You might take a loss in something else. You can say, oh, which ones are going to work? Folks, that's the whole key to this darn thing. You never know which ones are going to work. That's the whole premise of what we're dealing with. We're dealing with probabilities. That's the whole premise. Look, well, that's not. When John Jameson and I did the Floor Traders Handbook, we went through 30,000 simulated trades over a 35-year period in the 3,500 trades over a period of 35 years using half-hour charts in the euro, just proving how ABCD works. Okay, it works 65% of the time. That's 25% you're going to lose, and the other 10% you're going to break even. But they do work. And the payoff is better than 2.5 to 1. But you don't know. There's strings of losses in there, 6, 7, 8, 9 in a row. But there's also strings of profits. But it all averages out. What you have to do as a trader, and hopefully we'll have PT back as she's moving to a new place, but she'll be our guest next week, and she'll talk to us about these probabilities and how they work like that. Okay, so this is what we're watching here on the daily chart. And I'm thinking it's, so far, it didn't collapse today, and it's acting the way I want it. Can't ask for anything more than that. So I put the stop in. I don't even watch it. Actually, I take it off the board, and I don't even watch it very much. Let's get the meal off here, get this off here, and I wanted to go to the soybean oil here also, and then I will go back to the stocks in just a second, but I do need to watch the soybean oil, because that's a real sleeper here also. Because we're setting again, we're right almost exactly back to that 382 again, folks. There it was. We had the big run up, and we had to move down. It's just setting in this area. I'm watching this, because if we get below here, folks, there was the gap when the Turkish government said no more sales of oil. And I believe it was something like that. And anyway, we get below that means we're going to have a ABCD to the downside in soybean oil. So I'll be watching that one closely also. That would be the ABCD coming in right about, that'll be right about there if it does that. So, okay, those are the ones. All right, now let me get back to the old stock market here, where we are. This is my interpretation, folks, my interpretation, all right? Now, we've talked about this because this is what we've been watching, all right? There was the big move that we had up here. Remember that? We had that top lined up. It was absolutely perfect. It couldn't have been any better. Within actually 10 points. It went 10 points higher than our target and able to get you filled. You had a 382 here. Then you had the big move here yesterday on the 28th. We went up to 23.37. Then we came all the way back down, taking out this low. And all we've done now for the last 2 days, the second and the third, is we made a 50% retracement of the whole thing. That's a 50% retracement of the whole thing. So that's why I still believe we're heading down. I have some more information about that also. Stay with us.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direction's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, there's the E-mini making a 61% retracement off the high we made on the 28th of August. We just saw it at 50% on the NASDAQ. Same thing in the Dow Jones, and the same thing in the Russell. So that's all I'm watching those, telling me that this is a normal type correction that we're seeing today, and I still think I'll remain bullish. Now, I want to explain to you about astrology. When Ruth Miller first told me this in 1986, I was very, very skeptical. And I mentioned the first thing she asked me, how would she prove to me that this stuff worked? I said, okay, I gave her 5 or 6 dates in the stock market. 1974, October and December. 1982 was a really big bottom. And then, of course, the other one was in I can't remember the date. But anyway, there were 4 or 5 of them. And then she showed me these planetary things and how they lined up. And she said, people get afraid because they hear the planetary thing. Planetary dates, folks, are nothing more than number of days between these planets moving around. The Earth moves around in, 365 days a year. Every planet has its own orbit, and when they match these orbits up, that's when these cycles come together. And so in 1974, there was a bottom in October. That's when I lost all my money in 74, October 74. There was another bottom in right after Christmas of 74, a double bottom with the same multiple conjunctions, just like we had at harmonic convergence in 1987. Okay, now when she's telling me this in 86. She's talking to me about August of 25th of 1987. Another one of these things was going to be happening, and that's exactly what happened. So I had started writing a book about this, and I happened to be friends with Sue Herrera and Bill Griffith and Ron and Sana. They asked me, I was on the show because when I was at Drexel, I had a big following, and I talk about gold and silver quite a bit. That was a main thing that I talk about. So I said it was going to be a big top here on the 25th. And of course there was. And then I became on the regular gas, but I had to drive down about 160 miles into LA to go to the show. But I do it twice a month. And so I was coming back from one of the shows, and I had an idea that, maybe I ought to make a prediction. I was going down to the show about what I think might happen. So after the top had been made, this was about around the 1st of October, because it was on the 2nd of October that I put these puts on. And I told Bill, I said, I think the Dow will be down more than 300 points. And biggest number of points that it ever dropped up until that point was 198. So I multiply 1.618 times 198, and I come up with just over 300 points. Well, it was down, I think it was a lot. It was down over 500 points, I believe, that day, down 15%. It was the largest single drop, even worse than the one of 29. That was the best buying opportunity of the 1980s, folks. The reason why that low in the Dow that day was exactly 0.618 of the low from August the 9th of 1982. So that was the big bottom. And then, of course, it's been going up. We are over these types of events right now, folks. They might not work, but we're over them right now. So that's why I'm being cautious, trying to alert you to, try to keep an eye on what you're doing, because one of these days it might be. And stop and think. In 29, the Federal Reserve raised the rates. Between 1929 to 1932, they raised interest rates 7 times. And the stocks went from 383 to 42. Now, if you'd have bought the Dow at 42 in 1933, 32, it went up 1,000 times up until just recently, 1,000 times. So anyway, giving you these dates may or may not mean anything. I don't know, but I believe they do mean something, and that's why I'm trying to drive them home here the best way that I can. You ask me questions on your emails and stuff. Some of them I can't answer because I'm not smart enough to answer them, but I'm using simple things that have worked for me in the past, and if they stop working, then by golly, I'll try something else. But so far, it's pretty hard not to do it because all the market ever does is repeat and repeat and repeat. So I don't want to talk about that stuff anymore. If it doesn't work, we'll talk about it. If it does work down the road, but we're going to have to see something really dramatic. This is big, folks. And if it's right, it's going to be, we make a lot of money. If we're wrong, we'll lose a little bit because we got in pretty good. There's no way we're going to take a loss on a trade, but we've got to set through some stuff like this when you have these big rallies. And because if you get out of your position, boy, that's tough. When I met Amos Hofstadter the first time in 72, he died in 73, he had a little plastic plaque on his desk there, his Reuters machine. We didn't have any computer stuff. His little Reuters machine, it says, the two little questions, has your position changed over the last few weeks? Yes or no? And then second was, has the private market reached your profit objective? Yes or no? And he said the answer to that is if he could say yes to either one of those questions, he could get out of his position. But if he could not exit his position. And he sat through some horrendous rallies. I saw him when he was trading sugar. Well, this was back when the sugar was 12 cents or something, but it would go against him $3,000. Now, $3,000 was a lot of money when margin's only $400, but that's the kind of moves that were happening. He sat through that to catch the big moves. I don't do that very often. I try to get in the best I can. And, we did okay during the move down from in February to April. We did all right with that. There was 20% down. Everybody was happy. Looked like it was going to go down forever. It bottomed on the 7th, and tariffs started changing on the 8th, and the rest is history. So that's what we're paying attention to here today as we're watching this stuff unfold. I'm going to cover a few stocks here today. For some people, might as well. I didn't get the clock up here like I should have, folks. Let me get this up here so I'll be able to see the clock and will tell us where we are. Oh, 1 minute and 20 seconds. My gosh, Al, that's a lifetime. We'll get up here and we'll look at Tesla first to see if it's holding up pretty good here. Well, Apple's always another one too. Here's Tesla. Let's just see where we are with Tesla today. Tesla's had a nice rally. We're backing up here today. That's a good sign. And the Dow stocks are the ones that are pulling everything down. Let's take a look at NVIDIA to see how it's doing here, because it's always been an interesting one to pay attention to. Here it is. It starts with an NVD. Hold on a second here. There it is right there. That's probably back to 180 something, right? 171. See, it's backed off quite a bit. See, NVIDIA has down... Boy, look at that low volume. Boy, that's not much. You can see it's gapped down. That's a big, one of the reasons why NASDAQ must be selling them. Anyway, we'll be right back. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direction's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, so we're going to take a trip around the world. We'll start over in Hong Kong. You can see the 3 drive to a top pattern in here. There was 1, 2, 3 drives here, another 3 drives here. It's now $600 lower. We topped last week in the Hang Seng Index. If we look at the DAX, there's the German DAX. You can see it started down from the big level here. So Germany has completed a big ABCD pattern. Okay, now in all these years, I've never seen so many of them occurring at the same time. Okay, there's the emerging markets right here doing the same thing. That 59.6 it traded is still up a little bit, but you can see it's very, very close to its ABCD pattern too. I did all the major stock indices, folks, of the Japan, India. All of India's in big trouble as far as, what am I talking about? It's turned down a little bit. Let's put it that way. Okay, here's John Jameson's favorite stock. He bought this back here at 30 something. I think right in here, somewhere around $30. He thinks this will be the next NVIDIA in the next 10 years. So keep an eye on Planeteer. They do a lot of work with the government. How much kind of work, I don't know. But you can see we had this sell-off, but it hasn't come down very much at all. It's barely made any type of retracement, so it still looks pretty good. If you buy it at 30, it's 156. You're not worried too much about it, right? So that's what the advantages of long-term trading happen to be. Okay, we got those out of the way, and we've already did NVIDIA. And, of course, NVIDIA on the big picture has got this monster pattern up here, like Goldman Sachs and all the others. You know, that's what you're looking at right here. You come down a little bit from that level, but tells you that there could be some correction coming in here. But no one's expecting it. That's the part that's interesting. But I am, and sometimes I'm right, sometimes I'm wrong. So get this one out of the way, and then get NVIDIA out of the way. And we've been asked to take a look at Mr. Appel, who's down by the well. Get it up here and take a look at it. One of these days, I'm going to tell that joke about Mr. Appel down by the well. Hold on a second. Apple, A-P-P-L-E. There it is right here. Here's Apple. And Apple, still Apple's up again. We're almost up to the 786 here at Apple. There's we talked about this. It's actually, there's your head and shoulders pattern right here, folks. There's your left shoulder. And as you can see now, it's violating the right shoulder by a little bit here. So this is the level that you'd want to be doing at, because that's the same level right here. Your stop would be right above here. You risk about 3 points. But that's what you're watching. Now, as you look at Apple, I see a couple things here. I don't trade stocks, but we'll look at this. We had the low right here. We backed off, okay? and it came right up to the level it's supposed to be at right about there. And that price is, there it is right there. We got another one right behind it, but this one you got to change a little bit because, see, there's your low right here. There's your high. Now you got that big move, right? So what you got to do is you got to change this 127 on the CD leg. You come up, change the CD leg to 127, and that'll get you to 232, and there's your number. There's your big ABCD right there at the 786, and there's your smaller one right here at 232. It's already above that, but we've taken out that high, so that's the first indication that, oh, you want this to be lower than that. So I wouldn't sell this until it closed below that 237 level. And if it closes below that, I'd sell it. If it closes above that, I wouldn't. But then no matter what, you're only going to risk $3-4 because your stop's got to be here. So that's what we're watching as we look. And remember, this is a weekly chart. Let's look at it on the daily. We'll probably get a little clearer picture here. Yeah, there it is right there. You can see almost at the 786, and you go way back to there. There's your number right there. So you're pretty much spot on. We'll see if it's going to work, but we'll wait and follow that a little bit later. Okay. Now the next one we want to take a look at here is pull this up is this CrowdStrike. Come on, Larry. Caterpillar, there's what we want to see because the poor old farmers are in big trouble, and Caterpillar is still holding its own. It's had some big swings here. This is the weekly. You can see in just this past week, we had a big gap down. This is where we are right now. So it's backed off quite a bit. There was a target, rallied up, and now you're down here looking at this on the daily. Probably looks pretty bad on the daily. Well, not really, because it's just down right in here. So still, all of these things have had tremendous runs, folks. And when they start to fade, look out. If, in fact, they do. And my guess is that, yeah, that's what I think is going to happen. But again, I'm often wrong, but never in doubt. Got two more stocks to look at for you. And one of them here is Costco. They ought to watch that because that controls the world with all of its buying and stuff. Here's Costco on the weekly, and let's just see. I haven't looked at this in a long time. Well, there's a lot of ABC. Oh, there's your 3-drive pattern again. Wow, they're everywhere. There's drive 1, there's drive 2, there's drive 3, and it's this was 1.27, this was 1.33, and you also had this coming in right here. Let's see how close we came to the old ABCD of this one. There's AB equal CD, and that said it should got to 73, and the high was, oops, this one didn't work. 72.55. It was supposed to go to 73, so I missed it by 50 cents. We'll try our oscillated moving average numbers in just a little bit. But anyway, moving averages are great, folks, if you know how to use them, and no one is better than that than Basil Chapman. He is a master of it. I'm so impressed with what he can do with moving averages, and I almost look at him myself, but haven't used him in all these years, so this old dog is not going to be able to change his spots, so I'll just leave that alone right there. Now, we had one other stock we want to talk about. That is in the food section. In the travel section, is Federal Express. These stocks have been hit really badly, folks. And you notice, stop and think, with this bull market, you think there'd be a lot of stuff going on with supplies and stuff being shipped, but business is a little bad up in here. We had there's your 3 drives up in here. Now we're just in this area, not too much going on, but still holding up relatively well. So that's those. Let's take a quick look at one other thing. I noticed that the S&P had started to sell off again. It came down. Here's we are. We got game going on now because we just made an ABCD at a 382. This is real important, folks. Get this up here. You'll see where we are. There it is right there. That's your game right now. There's your 382. Okay, just hit it right there. That's the beeper went off, and there it is right now. If you get below this, then game's changing. But right now, all we're doing is completing that 382 pattern. We've dropped, just from today, we've dropped 65. We dropped 30 handles already, and we hit that 30. Now we're bouncing back up again. So those are some of the things that we're paying attention here in old Futuresville, and we'll see how they wind up here pretty quickly. How much time I got left on the old clock on the wall here. And 47 seconds. That's in Al's terminology, that's 2 lifetimes. We want to look at GDX. This is the gold miners. I imagine it's off to the right. Oh, golly gee. This is what they call a bad tick, folks. And nothing you can do about that except erase it. And nothing I can do that. Delete that bar. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the AI for today. It should be starting to top up here in gold here pretty soon. If you go to the 1.618 expansion, and this comes in at 46, trading at 39. Look how it's moving up quietly. I'm going to sell it at 38.46. I'm going to risk $5, put a stop at 36.51. I'll sell that all day long against these numbers, especially 1.618, folks. I love that number. That's the end of the old Fibonacci spiral, so that's what I'll be doing. I'm going to sell it at 46. And I'm going to put a stop at 51, $500. That's all I'm going to do. Doing it for 2 reasons. That's the 1.618 expansion, and that's good enough for me. I followed that numbers, and also around this time, it said the last part of the day, it should roll over. But remember, these only work part of the time, so that's not a type of risk for most people, folks. But for an old guy like me, hasn't got many days left in the old trading manual, you've got to put some trades on, and so I like that one, mainly because of the 1.618 expansion. The secondary reason would be the AI program right in here. Now, tomorrow we're going to have Stan Harley as our guest. That'll be our guest on Thursday, and then on Friday, we're going to have our guest is going to be Mike Moore of Moore Analytics. We want to have Mike as our guest there. Okay, remember today is the anniversary of the high in the stock market, 1929. It went from 383. 2.5 years later, it was trading at 42. From 383 to 42 was 96%. Of the Dow stocks, the 30 Dow stocks, 16 of them went bankrupt during those 2.5 years, folks. It was a tough time for everybody, all right? So let's keep that in mind. Might come again, might not come again, but we want to watch it, all right? So that's what we're paying attention to today. So live every day in an attitude of gratitude, and may God bless.